Hello and welcome to another episode of Crypto Charts. I am Fausto Botelho, and here we use our experience in technical analysis and try to extract logical indications about the future behavior of prices, which is what we can get if we see a chart in all its aspects. I am bearish. I have been bearish on the S&P. I am very bearish on the S&P, and it keeps on signing that it is indeed entering a bear market. The implications for Bitcoin remain to be known by us because it has never happened a crisis in the stock markets of the world in a situation in which there is a small airport, which is the crypto airport, that would eventually be available to receive not much, but some, maybe some of the birds that will flight for quality. If you never heard about this expression, flight for quality is a movement that always happens whenever we have a crisis. Whenever the stocks plunge, people sell stocks and they run for the security of the treasury bills of the US. The point is that in 2008, and let's go to the charts, right? Much better to talk about prices looking at a chart. Well, I'm showing you the S&P adjusted inflation corrected by inflation corrected, adjusted by inflation, which means it is against CPI, indexed in the CPI. So in 2000, one thing I want to call your attention to, in 2008, we've had a upward movement of 74%. Nowadays, we've had a upward movement of 265.8% approximately. Right. So in this era, the US owed $9 trillion. Nowadays, the US owes almost $22 trillion. But what I was saying is that whenever the markets crash like they did here in 2008, or like they did in 2000, but let's talk about 2008. Whenever the markets crash, there is what's called a flight for quality, in which people get out of stocks and land their ships in the safety port of the treasury bills. But as I told you, the treasury bills at this time were something. The owner of the titles, which is the US, owed $9 trillion at this time. Nowadays, it owes almost $22 trillion. So eventually, this is not a safety airport anymore for you to land your ships, right? Or for you to port your ships. And what is happening nowadays is that we have this small airport, which is the crypto space, the crypto assets. But the crypto assets have only $120 billion of market cap, while the stock market of the world has around $100 trillion. So 1% of $100 trillion is $1 trillion. It's too much for the crypto. So what I'm calling your attention for is the fact that if eventually cryptos are seen, eventually happen to be seen as a reserve of value, as a safe port, if things get tough, they could, they could witness, we could see a boom that we never thought that would have happened. And what I keep thinking of is that if that is not one of those things that whenever it happens, we look back and say, well, it was right there in front of our eyes. But okay, I'm just going to be showing you in this video what's up with the S&P, because I think we've had already a reversal of the upward movement and we're starting the downward movement again. Then I'm going to show you some few coins that I think might eventually outperform Bitcoin, which I think nowadays it's going to fall, because I don't think any asset will escape from the wild bear market that I foresee coming next days, maybe next week, maybe a couple of weeks or something. So in the beginning, I think what all the world that owes stocks will be willing to do is just get their money and look at their money in a safe place. That is treasury bills. Afterwards, eventually, people will go back to cryptos, and that is when we might have a bull market in the cryptos. Let's see. Let me show you some evidence about what I'm talking. Okay. So first of all, back to the S&P. Well, I showed you that we've gone up much more than we had in 2008, right? More than 3 times this upward movement, and almost 3 times better saying. The market broke this trend line, this 9-year trend line. The market produced a double top, broke the support of the double top, confirmed the double top because it reached its objective of the double top, and then it came back. But the point is this the beginning of a new upward movement, which is going to produces a triple top? No. Which is going to start a new bull market? Or is this just a pullback, A, B, C pullback to the former support line, and now we're just going to be seeing the bear market take over again? Well, I think it's the second option, because we've had a reversal here. We've had an ugly reversal on the S&P. We've had an ugly reversal on the Dow, which is right here. After a gap, a reversal is very, very bearish. And we had an awful reversal in the Nasdaq. In the Nasdaq, look at that. There is a beautiful evening star here. Where is this happening? Well, this is happening in a very specific and special contest, which is right where the market should see resistance. Actually, it should be seeing resistance at around here. It saw some resistance here at 6,600. Then it went up and then it reversed. Now, did today's candle in the Nasdaq confirm the reversal? Well, not necessarily, but I would say in the Nasdaq was a neutral candle. I would prefer that it had closed in the lows, making a Marubozu closing in the lows. But it didn't. But it also did not deny that we had this reversal here, and especially in the Nasdaq, we're probably doing that in what is going to be called a bear trend line. So it's all fitting in the theory that we're starting a bear market, and these bear market should end up in a crash. Now back to the S&P, which is the guy that rules the world. We have the same thing. You can consider that an engulfing. That happened when the market was testing resistance. Resistance was exactly around here, so eventually the market broke this resistance level, and then it's about to re-enter this resistance level. So I think that's a reversal that's going to put the market down again, and then we're going to have a wild bear market starting right now. Well, might be wrong, of course. The market instead might give us only a... Oh, there's another thing I didn't comment, which is the characteristic of a drift pattern. Drift pattern is something that happens after a upward movement, then the market starts to drift in the direction of the movement. That indicates that the market, that this upward movement is losing strength. And it's a formation, a chart formation, illustrated in many dozens of technical analysis books, and it reverts the movement. So, as I think it's going to be reverting the movement. But eventually, yeah, the market, after a drift pattern, can transform the drift pattern in a upward flag. And if that happens, then we're going to be counting 1, 2, 3, 4, 5. 5 eventually is going to be an A movement, then a B movement, then A movement, then a B movement of ABC, and then a C movement of another 5 waves upward, and eventually we could reach the top again, or eventually it can break the top or whatever. So it's crucial for us to follow what the market is going to do tomorrow. Tomorrow is going to be a very important day, because if we break this support here, we're going to confirm this drift pattern, and the market will be coming down, probably testing tomorrow, even tomorrow, the 2550 level here, the base of this drift pattern, and it's going to be looking very much like an ABC, or in other words, just a reaction of the bear market that we think is starting. Bear market that we think is starting, and that should come to the first Fibonacci correction level, which would mean the market would fall, that hurt it, 32.4% to reach the first Fibonacci level. Which I think from now on is going to be like in crash mode. What is a crash mode? Crash mode is a situation in which the market falls. Well, let me show you a crash mode. I did that last video, but a crash is just a situation in which the market falls very fast, falls very fast. Like this time here in 2008, September, October 2008, in which the market fell 30%. In 14 days, 30%. That's a crash. Why is that a crash? Well, because the newspapers and everybody, they're going to be calling that a crash, right? So, and what happens? Credit disappears. Everybody pulls their handbrakes. Every companies, every institution, every government, every individual, so everything slows down, and you know, as Warren Buffett, I think, said, is when the market falls that you see. No, it's when the tide retrains, or when the level of the ocean decreases, that you see who's swimming naked, right? So it's when the things start getting rough that you're gonna see who was in good shape and who was not in good shape. This in the S&P is also a probable place for us for a top to happen. So we could place this resistance trend line. So a lot of things indicating that the S&P will start falling now. So what's to Bitcoin? So, well, Bitcoin is accumulating in an accumulation that has all the characteristics of being a continuation pattern, which is a pattern that will continue its previous movement. So we're probably going to 2000. That's what the weekly chart is saying, and the daily chart as well. Here's for the daily chart, our descending triangle. Market technically reached the objective of the descending triangle, and is now doing another symmetrical triangle, and especially more specific in this triangle, it is flagging down. Market is flagging down. If we go to the hourly chart, I'm going to show you something here. You see, the market here broke this resistance level, which was 3,600, and then it wasn't. It didn't go through. It didn't keep on. Then it broke again this other support resistance level, which was 3650, and it didn't go through. It came down. These other days, yesterday it broke this resistance level and it didn't go through. Now, in the other hand, it broke this small short-term break trend line, and it's nowadays it's flagging down. That we can see better in the 2-hour chart or 4-hour chart or in the daily chart. That's a bear flag. So by all means, I think we're coming to test the the low of the market after the top of 2017, which is at, considering the Binance quotes, is at 3156.3. I'm glad to inform that our terminal, our platform, is already showing the UTC close for daily charts. So this is it. Bitcoin's coming down, and that's the reason why we recommended for our customers to buy. Where is it? Crypto 1, Crypto 2, yeah. To buy, no, it's not here. Calls cryptos. Let me just do something quick here. To do this. We've recommended our customers to buy this item here, this token here, which is True USD. By the way, if you like the video, please subscribe our channel. Click the bell to be advised of new videos. You're going to be helping us a lot. And also, if you're opening an account in Binance, please use the link in the description, and you'll be also helping the channel, because we're going to get some commission, a small portion of the commission that you generate. And of course, there's a link, there's a Bitcoin address if you want to donate to the channel. Thank you very much, appreciate very much, and I need your help if you can. Thank you. So, back to the chart here. We've recommended not exactly selling Bitcoin, but buying this coin here, which is True USD, which is a stable coin, as you may well know. And so in order to try to increase the amount of Bitcoins that you have. Now I'm going to show you quickly the cryptos that we've been calling an upward movement. And the first one is Bitcoin Cash. We called it yesterday. It so far is going well. And that was because, quickly here, because we seen the breaking of this resistance line here. Oh, you're seeing a different chart, right? Yeah, Binance would only show you the chart of Binance of Bitcoin Cash ABC from November 15th, from the fork on. But what we've done is that we united these two charts. That's Bitcoin Cash before the fork, and then we made the first day, the opening of the closings be the same, and so we produced this long-term chart, which is, you know, the new Bitcoin Cash ABC and Bitcoin Cash, because it is what it was, right? So we have a much better view. So upward movement starting, so we called a long position. Binance Coin, we also called a long position. Day before yesterday is not going so well because it's not breaking the resistance that we thought it was going to break. But it was a good trade, we thought, because the stop is only 2.2% below the entrance point. So I don't think we're going to be keeping this position for long when I look at this downward candle here. But anyway, we're still there. Tron, we called the position in Tron 3 days ago. It's going so far well, and we administrate, as I've said many times here in the channel, the positions with the hourly chart. And these are the stops. That's the original stop. It was below these buttons here. And then we moved the stop here almost to the entry point. And we're already in the profit side because the stop is above the entry point. You're interested in what's this green line? The green line we call the palm. The palm is the palm of my hand. Okay? Because eventually the original stop would be a palm away. And just to describe, that's the same distance. And this palm, it's right here. It's over here. So that's the original risk I was taking in the position, right? This stops a little. It should be here. So if the market comes down and these distance, which in a log scale means a certain percent change of 88.1, around 8%, also 8% here, right? It will touch our stop and take us out of the position, right, with a loss. Now, what happens if the market goes up in favor of our position, the same distance, but in our favor? Well, something should happen in order for us to keep trading with the chances in our favor, which is what we do in the method that we use called the with a stop method. So what we do is that we don't lose anymore. So whenever the market reached or almost reached, right, the palm, we forcefully move the stop to a situation in which we don't lose anymore. This time, I think maybe we over-raised the stop. Maybe we should have kept it here, but Tron is going up. It shouldn't break these two bottoms if it's going up. If it breaks these two bottoms here, it will certainly touch this stop here. That's why we increase the stop to over here. And then if it falls, we just leave the market with a small profit, right? Okay, True USD. Why True USD? Because it definitely looks like an upward flag or a rectangle or whatever, right? And not Tether, because I don't trust Tether. because there's too much talking about Tether and Bitfinex, and so I think Binance is quoting this. That's the second, as at least the last time I've seen CoinMarketCap, it was the second most important, with most market cap stablecoin. So that's the one I think we should buy. And Bitcoin Cash, which I already said. And there's another two here, which, well, first is Waves, that we didn't recommend because it gave the indication late in the night, and so we missed it. But I would very much like to be on Waves. Waves has surprised the market in the beginning of, in the end of November, with an upward movement of 342%, 300 and some percent in just a month. It corrected and it's now going up again, so I think it has good chances that, well, you know, keep on. Even though, because I can count here 1, 2, 3, 4, maybe we're going to a fifth wave. So I think Waves is a very good coin for you to consider to have instead of Bitcoin, to buy Waves with your Bitcoins, right? Of course, you can buy some True USD and some Waves and make a portfolio. You'll be eventually betting in a coin that might eventually outperform considerably Bitcoin. And the other one is Zilliqa. Zilliqa is, let me show you in the daily chart. Zilliqa is testing, but it just flagged up, you see. But it's testing a very important resistance level. It goes much further back here. It's a very important resistance. 1, 2, 3, 4, 5 levels, and I reckon that it just made a upward flag. It made an upward flag, broke the upward flag, and that was the second upward flag, and felt resistance in the top of the upward flag that was happening in this very important resistance level. So everything is calling for a breakout of this resistance level, and if that happens, I think we're gonna have all this upward, and all this upward would mean, let's take a look here, would mean that the market would increase by some 94%. It's almost 1x upward movement. So these are the coins we're taking a look at. Thank you very much for watching the video until now, and I'll see you next time. Ciao.